Welcome back to my YouTube channel, Victory Reverse Mortgage. I'm Benny Victory. We are on video number 2, part 2 of the video series that I'm doing, going in detail and discussing the numbers that I shared with you in the previous video and the first video to this series regarding the Consumer Financial Protection Bureau reporting that 682,400 seniors age 65 and above are now delinquent with their monthly mortgage payments. And then in the previous video, I broke down the numbers and I went to a little bit more of a deeper detail. And for the purposes of continuity, so that if you're watching this video without having the benefit of the previous video, I would encourage you to go see that video. But the part that we're going to discuss now has to do with the relationship and the importance of you as a senior or as a borrower understanding the relationship that you get into with the bank and what that relationship is. I will link another video that I did and I will show you what it looks like so you're kind of familiar with it, because I did that video around the basis of the 4 primary objections that I hear over and over to people getting a reverse mortgage. And I break it down in the sense that the bank wants my home, I won't be on the title to the property, all of my equity will be lost because my loan balance is going and I won't have any equity to leave in my kids for inheritance, and then the costs, the reverse mortgage costs too much. And I broke it down into its subparts and I went into a really nice detail, and that's a much longer video than the one that I'm going to do next. So I will link that video, because if these 4 objections are one or all 4 of your objections in some ways, that would be a really good video to see. But for the purposes of going back to the video that we're talking about and the information that's put out by Consumer Financial Protection Bureau, I think it's important to do a shorter version of that previous video, because you need to understand contractually what the bank's limitations are, what your obligations are, and where the two of you meet. In other words, unless and until you're clear on what it is that the bank's expectation is in its role as a lender when they're in a traditional mortgage, and as a reverse mortgage when you're talking about getting a reverse mortgage, unless you have these different roles and responsibilities between the lender and you as the borrower clear in your head, and the role that your house plays clear, there's going to be some murkiness, and that murkiness could be where these people ended up with this kind of number where they're at and facing the situation that they are. And I keep saying that it is imperative that for every problem that you're dealing with going into your retirement, given the seriousness of your retirement, given the length of time, the longevity, and how much money is required, you cannot be working with an advisor who can't see 6 moves past where you are right now. You cannot be getting advice for someone who can't see the bigger picture and around the corner. You can't be contemplating short game. You have to be thinking long game. And to me, the long game means I have to have the landscape. I have to know the parameters. I have to know the big picture that I'm working with so that I know what's expected of me. Well, when we're talking about a situation with banking and lending, we're talking about the lender is the bank. Let me be on this side so it's maybe a little easier and I'm in the frame. The lender is the bank. Well, the bank, in order for them to do anything with you that has to do with finances, the first and foremost thing that they're going to do is they're going to have to do their underwriting guidelines for the loan approval. And again, in the playlist, I've done a video series. There's, I think, 3 videos in there, and it's titled Why You Will Not Qualify for Another Loan in Retirement. And that 3-part series has to do with the fact that if your game plan is thinking that you're going to get another mortgage because your mortgage is nearly paid off or paid off and you have excellent credit score, you're under the assumption that what the guidelines are for the bank will get you to be approved for this new loan. And you need to watch that video and those 3 videos in that playlist, because this will pretty much torpedo that idea that you're going to get into a future loan. That's just a hard truth. So there's the bank's underwriting guideline. Then there is what you sign, which is the promissory note. And a promissory note, what I said is that it's basically an IOU. It sets the loan terms of how much money you're borrowing, at what percentage rate, for how many years, at what kind of a monthly payment, and in terms of what kind of a program. Is it a 30-year fix? Is it a 15-year fix? Is it amortized over 30 years, but the first 10 years are interest only? In other words, it gets into the nuts and bolts of the program and the guidelines. And the other thing that is discussed with the promissory note is your obligation as a borrower. In other words, once we establish what the terms of the loan are going to be, then we need to establish that you as the borrower have an obligation to pay timely monthly mortgage payments. You have an obligation as a borrower to pay property taxes timely. You have an obligation to maintain the property. Why? Because the property is the home or the collateral. Okay, and it's the basis of the bank lending you money, because the bank has a security interest in your home, which is executed how? In the form of a lien. What is that lien called? A deed of trust or a trust deed. So when people sit there and say, well, the bank is going to have me off title and I'm going to be off title and the bank is going to own my home. Well, this format that I'm breaking down with you is the same format whether you get a traditional mortgage or a reverse mortgage. And it's not unique to mortgages because the house is serving as a collateral. Why? Because the house is the security for the bank to lend money on. Well, how does it do that? It does that in the form of placing a lien. Okay, so when the bank says, look, in our promissory note, not only did we break down your obligations to what your mortgage payments are and what kind of a loan you're going to get, but we also discussed that you have certain obligations, and those obligations first and foremost are you to make timely mortgage payments. Okay, so how did all of these people get into trouble over here? How did 682,400 seniors age 65 plus get into trouble? Well, they got into trouble because they broke the first covenant with the bank. You know, the First Amendment to the bank and you is that you shall pay timely mortgage payments on time. Well, they didn't. And so the bank says, okay, because you didn't this, you broke our covenant, you broke our promise between the two of us. So if you do that and that continues for 2 months, 3 months, 4 months, the bank says, I have the legal right based on our promissory note and based on the fact that I executed a deed of trust on the secured property that I'm lending you on to go and do what? Foreclose. Well, the bank's ability to foreclose comes as a byproduct of you voluntarily agreeing with the bank to get into a contractual relationship where you signed a promissory note. So a bank can't just randomly, people think the banks can randomly just come in and foreclose on your property. It doesn't work like that. I don't want to give legal advice here, but you could talk to anybody who's in the first year of contracts in law school, and they will tell you that, look, unless and until there's a legal cause of action, then a bank can't go and start a legal proceeding, which foreclosure is a legal proceeding. Okay, so when the bank says Mr. and Mrs. Smith signed a promissory note and they were supposed to make timely payments and they didn't, I'm going to foreclose on the property, which is the security, which is the collateral. Well, that's the bank's legal right because they have a legal cause of action against you to foreclose on the property. That's not unique to the bank and you. That's the same as if you were to get in this case it's a foreclosure, but before you became a homeowner and you were renting an apartment, you signed a lease. Well, what is a lease? A lease is a promissory note. A lease is a form of a promissory note. What in your lease are you saying? You're saying, in my lease, I promise to pay you, Mr. Landlord, on the first of every month, $1,800 for rent. I promise to maintain homeowners insurance or apartment owners insurance on the property, which is your secured property. It's your collateral that I'm living in. And when you violate that, when you don't make monthly payments on time on your rent obligation to the landlord, What do we call that? Well, we call that an unlawful detainer. We call that an eviction. So it's not a foreclosure, but it's the same concept. It's unlawful detainer, eviction. It's the relationship between the landlord and the tenant. The landlord and tenant is a similar relationship to the bank who's the lender and you the borrower. Now, again, it's not foreign to you because in my other example, I talked about if you ever bought a car, if you ever leased a car, you financed it, whether you leased it or whether you purchased it. And I brought out my little red Mercedes and I said that if I decided to buy this car and I was going to pay all cash, I make a down payment. Bank of America is going to finance the length of years that I'm going to make payments to. And what is my obligation? Well, my obligation is to maintain ongoing payments on my car payment, to keep the car serviced, to have insurance on the car, because why? The car is the collateral. And when I fail to make timely payments, what's going to happen? Well, there's going to be a repossession of the car, whether it's a lease or a purchase. So this relationship in its variations, whether it's a car, whether it's an apartment, whether it's a bank, it's all what you've already known. But the reason I'm bringing it out is because the very first obligation that you assume when you become a borrower to a bank lending you money on a collateral, which is the home, is the fact that you say, I'm going to make timely mortgage payments. And this is also a brief primer or a review of the fact of why the bank doesn't need to be on title. All these seniors that are running around thinking I'm not going to get a reverse mortgage because I'm not going to be on title, the bank doesn't need to be on title in order to foreclose and in order to enforce its legal right. They all have to do is have a deed of trust or a trust deed by virtue of the fact that you accepted the house being as the collateral because it's the purpose that the bank is giving you the money on being able to secure its obligation to recover the money through the home. I wanted to put this layout for you here in this format because this is going to be the quick video, and in the next video what we're going to do is we're going to talk about why, in my opinion, 682,400 seniors and the 83,000 that are facing foreclosure now didn't see a reverse mortgage as an option or an alternative for them. And it has to, in my opinion, go back to the idea that they were so terrified of what I showed you on this side, which has to do with their negative beliefs that the bank wants my home, I won't be on title, all of my equity is going to be stripped and there's going to be no inheritance, and that it costs too much, that in their minds they could make do and just kind of kick the can down the road with their existing mortgage, hoping for, I don't know, some sort of a miracle, I guess, that they wouldn't be in the situation that they're in. So this is part 2 of the 3-part series, and in the next video what I will do is show you the number of people who, in my mind, if you imagine a bridge, okay, this side is this group of people, which is the 682,400 seniors that have a traditional mortgage that are behind, and then this is the bridge, and then the number of people that walk this bridge and go to this side, where this side is reverse mortgages. And the reason I got into this whole thing about the promissory note, the deed of trust and all of that is that when you get a reverse mortgage, there is a promissory note, there is an IOU, but the most important part of it is that there's no more making a monthly payment to the lender mandatory. And that's the big difference. That's why I laid this out, so that you understand that whether you have a traditional mortgage or whether you have a reverse mortgage, the bank does still have a promissory note. The bank does still have a legal interest in your property. The bank still does have the home as a collateral. You still do have an obligation to pay monthly, property taxes and homeowners insurance taxes and to maintain the property, okay? And that the bank relationship with you is still the same. But the biggest thing is that single obligation of having to make monthly mortgage payments, which is the reason that these people are in this position, okay, when you read 236,000 seniors have no confidence that they would be able to make their next monthly mortgage payment, well, these are 236,000 seniors that had they had a reverse mortgage, this would never be a concern because they didn't need to make a monthly mortgage payment. And I want you to have a compare and contrast with the obligation that you have and the legal rights you have. Here, you don't have any legal rights. You voluntarily signed into a promissory note where your obligation, first and foremost, was to make timely payments. So when you breach that, the bank has every right to go foreclose on. But because with a reverse mortgage, you never agreed to this, and the bank is perfectly fine with that agreement. Why? The bank is perfectly fine with that agreement because the bank understands it has its ability to recover, first and foremost, from the mortgage insurance protection premium, the MIP. That's the mortgage insurance. When people freak out about the cost and they're running out the door yelling and cursing about how much a reverse mortgage costs, when you have a reverse mortgage and you have the mortgage insurance in place, the reason you have the mortgage insurance place is that you don't have to make a monthly mortgage payment. Now, let me ask you this to leave you on a suspense thriller. Do you think if I would have gone to any one of these people in this category and said to any one of these 682,400 seniors that if I could make a deal with you today, going back and putting you in a position where you could have had a reverse mortgage instead of your traditional mortgage, where you're obligated to make monthly payments and now you don't have the confidence that you could, and 83,000 of you are facing foreclosure, 225,000 of you having difficulty covering regular payments, and 136,480 of you have to forego eating food on a regular basis in lieu of trying to make a mortgage payment. Do you have any doubt in your mind that if given where these people are, I would have approached them and said, there is an option that mandatory mortgage payments are not required, and through the relationship that the bank has with you and the fact that the bank can be secured knowing that after you're gone, after you sell the property, after you pass away, it can recover its financial interest either through the home or through the insurance or through the sale of the home when you sell it and it gets its money back. Do you have any hesitation in your mind in thinking that not one of these people that could have qualified would have refused that deal and elected to be here instead? I don't. In my mind, if this is the scenario and this is what I'm facing and I could qualify, I would take that in a heartbeat than what the alternative looks like. So you now have a really good frame between the first video, which was the problem, the second video, which is the frame of what you get into and what the obligation is, and the third video, the next video that I'm going to do, which sets up the basis of what this bridge that we talk about, seniors walking over to get to the riverside, to the other side where the reverse mortgage is and what's waiting for them. Now you have the really good inclusive view to watch. So I will work on the next video and I'll see you on the next video. Thank you very much. Have a beautiful and blessed afternoon, and I'll see you on the third video that's coming up. God bless you.